Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, November 30th, the year 2018. Let's talk trading. We'll have a weekly wrap up and a monthly wrap up all on the same day. And I know for the month of November 2018, each and every one of you listening to this video had stellar money and risk management on each and every trade. Right? Okay, for the month. Well, it looks like the euro yen right now is up 78 pips over the monthly open. And you can see it dipped down in that monthly lower wick zone there from the previous month and then came out, crossed the previous month's midpoint, and then fell back. So looks like we're going to close up for the month. Now, for next month, what I would expect to see, I would expect to see price to test the previous month's high. Could be wrong. But one thing to note, this month's going to close as an inside bar. So the high and the low will definitely be trades to look for a breakout. So write that down. So you see 130 point, say call it 14, and 129.49. Those are going to be the breakouts. They'll be the previous month's high and low. And we will look to break out of that inside bar. See what happened here when it was an inside bar? See, there was a very nice breakout there. So that's the play that we're going to look for next month. See, nothing difficult. It's very simple. No squiggly lines necessary. Okay, for the week, this is funny. My favorite trade did not fill the gap. Everybody else did, though. But once again, it did get close. I think it missed by 2 pips, but that's still a miss. And you can see here on the weekly, we entered the upper wick zone, passed through, came back in, exited the upper wick zone. So playing the weekly wick zone, which I know there's at least one trader out there who's been doing it, definitely paid off. And we drill down to the daily. You can see here, once again, looking into that upper wick zone right there. Actually, this really wasn't the upper wick zone. It got into the candle body right here. See, there was no upper wick, so it got into the candle body, reversed, headed into the wick zone and out. So you see here, even if you waited all this time to trade that breakout today of the lower wick zone, it still paid off by about 25 pips or so. Not a bad trade. Now looking here, 1, 2, 3, 4 pairs over 100. Very anemic. I mean, look, the pound yen only 66 pips. That was the beast, the new beast though. But I mean, that is anemic. 66 pips on the beast. Very anemic. And you can see here, dollar yen only 40 pips. What is going on? Not much, obviously. The buy zone, you can see here the pivot point open below the short zone. So we were fading the pivot. It paid off once, twice, 3 times, 4 times. So you can see here, fading the pivot proved. We never ever got a long trigger. So you see here, it crossed above the open a few times. So price is just telling you, just be short. And right here, if you just waited and waited and waited, you could see here, right about here might have been the time to cash in your pips, or you might have done it right here when price just reversed. But once again, just depending on what your targets were. Oh, and for those of you wondering here on the dashboard what these columns are, answer a question. This means the the high on the H1, the daily high occurred 20 bars ago. Okay, 20 H1 bars ago, which was right there actually. And the low occurred 2 H1 bars ago. 1, 2. You can see that's the daily low. And so right now we can see where prices are making new highs and lows right there. And the one in blue, if it occurred 1 bar ago. Why 1 bar ago? Well, that's if you want to play a reversal. So if it's occurring, you don't want to, if it's making a new high on the current bar, you usually don't want to jump in then. You want to wait till let that bar close, then you can trade out of the H1 upper or lower wick zone. So for example here, this made a low right here. So you see here, it put in a lowest open, that would be like a holo trade. So it came down here, came back out. So you'd be trading out of that. So in other words, when this one was making a new low, you wouldn't have traded during that bar. You let it close. You can see here, it barely went up, then it came down, then it came back. So this is the kind of pattern you want to look for right here. You know, lower low, higher low, take the green and go, right? And okay, green rats can look for an entry here, Larry live trade. And you know, I was thinking about something. You know, a lot of people will say, oh, you're all showing all these trades, hindsight, Harry hindsight. Well, many times that's how you learn. You do something, and then you go back and you look and see what you could do better. It's like if you're playing chess, maybe you lost a game, maybe you won a game, but no matter what, you go back and you look over the game, you analyze each move, and you look to see what could I've done better. So when you see these trades, you know, yeah, this is what happened. But see, now you can learn by what happened and say, hey, is the same thing happening? What's going on? Because it's trading. Even if the same thing's happening, doesn't mean you're going to get the same result. I mean, price can reach a certain point and do one thing and reach the same point and then do something different. I mean, you can see it right here. Price came up, hit this line and went through. Price came up, hit this line and then didn't go through. And then it came up, hit this line and didn't go through. So yeah, this right here would have been a profitable trade. This right here wouldn't. So what does that tell you? That's trading. You just never know. And once again, we saw what happened with the pivot right here. We took that pivot out. Here's the weekly pivot. And there's weekly R1 and weekly R2. We still have those 2 missed pivots. Seems like every time it gets close, it seems to want to pull back. But we can see just maybe it'll take it out next month. We got 1 month left, December for the year. We'll see if we can take out these pivots. But when you think about it, you know, over the course of a year, only 2 missed pivots. That's one of the reasons why I like that trade. And price action, you know, 1 ball at the top, right at the line, profit to be made. 3 ball at the bottom. We had a green at the line right here. So if you entered that trade right now, you're probably almost, well, no, you wouldn't have gotten stopped out because your stop should have been at like 0.495 or 0.49. And you give it that 1 pip just to see. But we'll have to wait and see if price will come back and get above that 128.60. And 5 lines from the previous day, high, close. You can see here, it was the same, open, mid, low. So this is really 2 lines. In case you're wondering, you said 5, but I only see 4. But if you look closely, you can see just one wrote over the other. But once again, just trading with candle color at the line. And we've already talked about the wick zone. we didn't have an upper wick zone, but we had a lower, and price does not like staying in the wick zone. It just doesn't. So you can take these trades. Now, some people go, well, why are you only trading out of the wick zone? But on the previous screen, you're trading with candle color. Well, that depends on what you as a trader want to do. Do you want to just go with the candle color here? Or do you want to take the statistical trade saying, I know if it gets in here, 7 times or more out of 10, it's going to exit. So that's why. Sometimes you might want to take this trade. Sometimes you may not. Because you see here, we're taking the trade to the upside on the upper wick zone, and then to the downside out of the lower part of the upper wick zone. And then, so we're taking the breakouts. And sometimes people want to take the trade entering into the zone, saying, well, for example, if it made a higher high, let's see, maybe I can find an example on another pair. No, let's see. Well, for example, here, see, it made a higher high, and then it came back down, and then it cut this candle right here, that high. So you might want to say, okay, I'm going to trade this way, it back into the zone because of the price action I saw here. So that's the reason why you might want to do that. And that's okay. Once again, it's up to you to find what works for you in the moment. And we talked about the wick zone. Here, holo setup right here, Larry live trade, wanting to go long at 128.53. And you can see here, we've got some congestion. I don't see any really big bars that might want to be covered in the near future. Okay, we've got a long trigger at 0.57, and we got a short trigger at 0.51, call it 0.52. And this is a Larry live trade, so we can see what's going to happen. My trading screen here, as you can see, once again, price at the color at the lines, just trading in the direction of the cross. And since I switched to pairs, we lost that tick chart. But you can see what is happening right now. The ask dropped below the peak of the bid, and you can see what's happening. So we've got, oh, now it just went back above. And so if we get a crossover hit this way, if we get the bid to cross over the valley of the ask, then buying will be resumed. And you can see right here, we just turn this on. So we're looking here to go long, and you see the buying starting. So, fellow traders, that wraps up the week and the month. I hope the week and the month have been profitable for you. So, you guys have a great weekend. Feel free to ask questions and send suggestions. And, if there's something you want me to dive into, but, for the most part on these, it's real simple. These are all horizontal line crosses. So I like to talk about, what's going on in your head to help you become a better trader. Because as you all know, it's not what you trade, it's how you trade it. So come back next month and let's drain the banks. Oh, by the way, click the subscribe button and click the alert button. I always forget to say that.